Welcome to Stocks in Translation. I'm your host, Jared Blikre, and I'm joined as always by Sydnee Fried, the voice of the people. And thank you to the viewers for tuning in. Before we jump into the conversation, I want to make sure you like, subscribe, and comment on Stocks in Translation on Spotify, Apple Music, YouTube, wherever you get the podcast. Today, we are excited to have join us Tom Bruni. He is the head of market research at StockTwits. Among other things, you wear many hats. Today's theme is perfect for you, I think. Retail power and the rise of social finance. Great for StockTwits. And we're going to dig into it with the word of the day, which is momentum. Gave it away there. We're going to tell you how to keep it on your side, both price-wise and social-wise, what every Momo trader needs to know. And this episode is brought to you by the number 2,547. 10. That's the all-time high in gold that was recorded in dollars only yesterday. And Tom, I want to talk to you about the markets here real quick. Just give us your overview of all the volatility, all the crazy things we've gone on. Where do we stand right now?
Awesome. Yeah. First off, thanks for having me. I guess the way you would describe markets right now are uncertain. We've got the elections coming up. We've got the Fed decision. We've got uncertainty around the economy, whether or not it's going to go into recession. But we do have a lot of opportunity as well. If you look at the broad-based sector ETFs that comprise the S&P 500, a lot of them are at all-time highs. So there are opportunities across the board, whether it be financials hitting new highs with capital goods. That's all right.
Healthcare too.
Yeah,
like industrials are up there.
Healthcare,
communication
industrials. So a broadening of participation is kind of the theme for 2024, and a lot of people are finding opportunities in those areas.
All right, I want to jump into our word of the day, which is momentum. In the context of investing and trading, momentum, also called MOMO, affectionately refers to the tendency. You're laughing.
I'm dying at MOMO. The first time you said it, I was like, what is that?
All right, let's get back. MOMO refers to the tendency of an asset's price to continue moving in the same direction, either up or down, based on past performance. So we have momentum traders, MOMO traders. We also have social momentum, something that would kind of fit in with you and StockTwits. Tell us what momentum means to you.
Yeah, absolutely. So I think one thing that the pandemic showed us and kind of the surge of participation in the markets, there is an element of community around a lot of stocks, specifically the meme stocks of GameStop, AMC, Bed Bath & Beyond before it went under. And so I think Wall Street has really come around to the idea that retail traders are a force to be reckoned with, and a platform like StockTwits is perfect to kind of track the conversation around that in real time. And some of the key metrics we'll look at is like the amount of symbol page views that a stock gets. So
that's basically what we do here at Yahoo Finance.
Exactly.
Too.
How often are people searching the stock? Then how often do they take the next step of sharing a message about the stock, whether they're bullish or bearish or researching the stock? And then finally, the next leg is like, how many times or how many people add it to their watch list? So once you add it to your watch list, you're kind of committed, right? And so that shows kind of like the short-term momentum of attention, and then it builds over time to people that are, building communities around these stocks.
Wait, why are you committed when you put it on your watch list? You're committed to tracking it?
Exactly, yeah. Like if you search it one time, you're like, maybe not so interesting, whatever. But if you put it on your watch list and you're getting alerts for it, chances are you either own it already or you're interested in buying or selling it. And so you're just like one step further into the conversation.
You said retail traders are a force to be reckoned with. How often do they get it right?
I mean, that's a good question, right? Like institutions, retail, they'll always get things right and wrong. But what I will say is retail has gotten really good at playing games that Wall Street may not necessarily be involved in. And so we see a lot of participation around kind of underfollowed trends in the media, whether it be small and micro cap stocks, whether it be emerging themes. And so I think that's really where the community has found their niche, is identifying opportunities that maybe the bigger institutions can't.
Is this new? Like, is this something that just kind of came out of the pandemic? Has this been building for decades? It seems to me, I've been watching markets for over 20 years now pretty closely, that things have changed.
Yeah, I mean, things started, look back 25 years ago during the dot-com bubble. There were message boards, there were ways to communicate around what's happening in the stock market.
Yeah, Yahoo
was at the center of that. So I think the difference is the speed at which this has developed. Over the last decade, we have commission-free trading. You can trade from your phone. You can send messages in real time. Companies are using kind of these platforms to communicate with their investors. And so just the speed and the accessibility of all these tools and overall exposure to this information has really sped things up and made it a lot more sticky.
Is more participation, this is going to sound odd, but is more participation in the stock market a good thing? Like, if you're a beginner investor and you don't know that much and you're kind of just like hitting buttons and making trades, like
that's what it's all about, hitting buttons and making trades.
That's how I classify. Like, is that a good thing? Because so many of our guests, when I kind of ask them about what you should do as a beginner investor, a lot of them genuinely say, like, maybe you shouldn't go out stock picking. Maybe ETF investing is better. So I don't know. What's your take on that?
Yeah, for sure. That is a very important point. But I think the exposure from an interest perspective, right? We all have to start somewhere. And generally, if somebody is telling you, like, how many times have we heard from our parents or family members, like, when you get your first job, put some money away, like, what does that really mean? Like, a 401k doesn't get people excited. So if their initial exposure to the stock market is hearing about their friend who, like, kind of YOLO'd in GameStop or something,
Exactly.
like, sure, that might be their starting point, but it's certainly not their ending point. So people start small. And contrary to popular belief, retail investors are not kind of like all in or all out in terms of the YOLOing.
Important point.
They are taking a balanced approach just like everyone else. So they've got their 401k, they've got their passive ETFs, but then they have some play money where, 10, 20% of their net worth or investable assets, they want to participate in the markets and really take a shot at finding the next big winner.
Yeah, I think anecdotally from what I heard from a lot of newer retail traders is, they got the stimulus checks. They saw some other people doing it. They thought it was interesting. Either they liked it or they didn't. I mean, the people who opened up accounts 4 years ago, if they're still trading today, that's something right there. Because it's not easy. It's not easy getting through your first bear market, notwithstanding all the crazy things we've had to deal with. So, just kind of getting back to the theme here and community and everything, I wanted to ask you about StockTwits in particular and how your community works. It's kind of built on the same technology as X. X is, branched off in a different direction, but how does your community work?
Yeah, so we have 8 million users, and it's all centered around ticker symbols. So we were kind of the pioneers of the cash tag.
Yes, you actually were.
Plus years
Was
ago.
it Linzen?
Yeah, Howard Linzen invented
Right.
the cash tag, and StockTwits kind of formed around that, starting on Twitter and then separating out as its own platform. And so, yeah, it's a ticker-based system. So if you're interested in learning about Apple, you go to the Apple stream and you're going to see, all the relevant information. You'll see news from sites like Yahoo, you'll see user messages, and that's kind of like the starting point for users. Our place in the ecosystem is being where the real-time conversation happens around big market events. And so that's where we see people get the most value out of the community. And it really comes down to curation, right? If you can identify the people on our platform that are investing the way you want to invest, looking at the types of stocks that you want to invest in, it's really about the curation process of building your own micro community within our larger community. And that's how we're seeing most people approach it.
And so what are people looking for? Are they simply looking for financials from the earnings reports? Are they looking for articles, opinion pieces about whether you should invest in a stock or not? How is that kind of curated?
Yeah, it's a little of both. So we'll have the basic financial data available. We have some basic charting functionality. Really, people are looking for kind of what the emerging trends are. And so we have a trending tab that's based on our social activity. So we organize a lot of the data that we put out to the community around activity measures, number of watchers, to give people a feel for like, where is the conversation moving? Because again, it's happening in real time and it gives people an opportunity to identify those trends before they hit the mainstream. And so that's kind of how we think about things, is trying to help people discover their next big idea, whether that be through data that we help curate or content we put out, or just directing them to the proper users to follow. However they get there, we're happy about it.
How much of that is automated versus human intervention? And, like, let's say I'm a new trader and I'm just interested in getting out. will I get recommendations? Like you might want to follow this person. How does that work?
Yeah, absolutely. So we have some basic tools in place where, within the onboarding flow, you'll get recommended users, suggested follows that we're carefully curating to help give you the highest quality content on the site. Additionally, we have our own newsletters and some of our other content that we're putting out that helps kind of people that want a more leaned out version of StockTwits. Instead of being on the platform 24/7 and following the trends themselves, they rely on me or any of our other content creators to kind of curate the best information and deliver it straight to your inbox or on YouTube or wherever you are, really.
How do you identify emerging trends? Is it just what people are talking about? It's kind of what's popular?
Yeah. Certainly. It's a mix of both, right? So we kind of have to blend what we're seeing on our platform and what is relevant to a larger audience. So a lot of the products we're building and a lot of the messaging we're trying to build around is helping people find the information that is most relevant to their investment strategy. So we're building different newsletters, different content products around micro communities, whether you're interested in investing in small and micro cap stocks or electric vehicles or any of that. So I would just say monitoring that trending tab on a regular basis is kind of where we see uptick in message volumes for or activity around symbols that are new or fresh. And we do a job of, our job is to help surface those and get them in front of people.
All right, we're going to take a short break here, but coming up, we got to talk prices on the barbarous relic, otherwise known as gold, and a trip abroad for today's edition of Who Wore It Better. We are back, and this episode brought to you by the number 2,547.1. That is the recent all-time high in gold, notched only this week. And this gives us the opportunity to talk about commodities, the dollar. Anytime gold makes a record high, it draws some attention, but gold is also misunderstood in a lot of ways.
Yeah, absolutely. In an environment where inflation is falling, gold is making new all-time highs.
Yeah.
So that's kind of a weird juxtaposition right now. But I do think it has become, from a technical perspective, right? We broke out above the 2011 highs. So that's getting a lot of attention from, trend followers, technicians. But on the fundamental side, we're seeing it used as kind of like this uncertainty hedge, right? Like, it's unclear where interest rates are going, where the economy is going. So if you can put something in your portfolio that is kind of going to act as that uncertainty hedge in the short term, we're seeing a lot of people use it that way. Also, gold is a great trading vehicle, whether it be through ETFs or the gold mining stocks. A lot of traders are just interested in the short term.
Just in the price action day to day.
Yeah, there's a ton of volatility there, so it attracts a lot of traders.
I guess when I hear like gold is an inflation hedge, I laugh. I don't really understand it. Like, okay.
Because it's Bitcoin.
I just think like, okay, so I'm trying to hedge my portfolio. All my other stocks are going to go down, so I just load up on gold. Like, I don't get it.
Yeah, the data is conflicting. So like over the long term, actually the stock market is a better inflation hedge because, companies can raise their prices, they grow earnings, and then, that helps their stock prices
grow. Yeah, so you
grow.
participate in the upside there.
So, but in the short term, because prices are driven by narratives and sentiment, you will see periods where gold outperforms just because people think it will outperform. And, when you have an asset that doesn't have a lot of fundamental backing like gold, it doesn't have earnings, it doesn't have cash flow. Like a lot of the times, vibes will just kind of be
well, and
the price.
It also costs money to store it, so that's a big factor. And when you see interest rates on the decline as they are now, gold becomes more of, it becomes a better investment just from the storage perspective because you're not competing with higher treasury rates, for instance. So I think there's a degree of look ahead by 6 months. Maybe it's a little bit more, maybe it's a little bit less, but that creates a lot of the conflicts between, all right, it should be doing this, but it's not. I see gold sometimes as an inflation hedge, sometimes as an Armageddon hedge, but I would say inconsistently so.
But then should you just kind of keep gold in your portfolio throughout your life?
A lot of
kind
people do.
There. Yeah. I don't see why then you would sell your investment necessarily.
Well, I think it has to do with what gold is correlated with. So when you have an investment portfolio and everything's going down except for a few things, you want to be in some of those few things that either hold their value or go up. Gold historically has been one of those things, I think.
Yeah, for sure. And I would just add that, again, gold is kind of one of these things that operates on vibes. So, try not to overthink it. If it's part of your long-term diversification strategy, great, hold it. But if you're a trader, then futures and gold miners and other leveraged bets on the price are probably where you're going to spend most of your time.
Are you seeing a lot of interest on the site for gold?
Oh, absolutely, yeah.
And gold
especially
stocks?
over the last couple of weeks, we've seen Barrick Gold is kind of a big name in the space. It's broken.
They got the ticker.
Exactly, yeah. So it's broken out above like a few key technical levels. So that's on people's radar. And then we're seeing the kind of leveraged ETFs also in play, because as long as gold has short-term momentum, people are looking for the kind of most aggressive way to play it.
We haven't talked much about the Fed. So we are expecting some rate cuts in September, kind of ties into everything we're saying. What do you think about the Fed, what they're going to do, and just in general, how you approach your thinking?
I think people kind of get caught up in the day-to-day of the Fed.
I know we do.
We definitely do.
Every day there's a new Fed speaker saying something, but if you look at the actual data and kind of what the Fed's been saying, their goal, has been to bring down prices, and the labor market is certainly slowing, the economy's slowing, so they're getting what they wanted. I think the big hiccup right now is the market expected the Fed to cut in July. And now the debate is whether or not they're going to cut 50 basis points in September, or if they're kind of like behind the curve. So the market always thinks about things in the way of expectations. So is the Fed way behind the curve, or are they kind of just in line with the curve, or the ahead of the curve? And the Fed has consistently shown that they're behind the curve. And so
consistently
over the last couple of weeks.
But it's a hard job.
Yeah.
Exactly.
I do feel like they can't win, at least with the rhetoric that's going around.
If they don't land this landing soft, it's a tough thing that they're trying to do. It's literally threading or physically, not metaphorically, threading a needle there.
Yeah, I think they get a really rough rap. It's a very difficult job. But what I will say is pay less attention to the kind of the market expectations and just focus on what the Fed is saying. Whether they're late by a meeting or not, they're meeting their objective. They're getting things in the right direction. And so as long as they don't do something crazy out of left field, generally we know what they're going to be doing.
On that note, we're going to pivot today to who were better, and we're going to venture abroad to India, where the tech landscape is booming right along with the population. The race to dominate the subcontinent's digital future is on. You have global giants like Google and Amazon. They aren't just knocking on the door, they are building the house in certain cases. As India's economy and their GDP surges past $3.5 trillion, growing at a brisk 7.8% annual clip, we want to know which household U.S. tech company is wearing the growth opportunity in India the best. I just want to phrase it. There are lots of Indian companies that we may not be familiar with, but I just want to know, in terms of the U.S. companies that we're familiar with, who's really laying out who's really getting it done there?
Stick with the big boys, Amazon and Apple, right? So Amazon on the e-commerce side is really getting aggressive in India. Same thing for Walmart, I believe. And then on the tech side, Apple and all these other manufacturers are looking to diversify or have been diversifying their manufacturing capabilities away from China and some of the other, Asia Pacific countries. And so as they look for alternatives, they're expanding not only their manufacturing activity, but as GDP and more people reach the middle class in India, that becomes another market opportunity for companies like Apple to offer, unlock a new market in terms of lower priced phones and, start to grow there. So I think that's probably the biggest opportunity right now is seeing where people are, where companies—
The rising middle class, basically.
Exactly, shifting their manufacturing. And then on the financial services side, it's interesting, there's a lot of market activity in India. I used to cover Indian stocks. 80% of the world's options trading took place in India last year.
Did not know that.
That is a crazy stat. And again, part of that has to do with the wealth divide, right? Like if you are trying to move up the economic ladder, one of the ways to do that is by getting exposure to, the financial markets and doing it that way. And so that's going to continue to be a huge space. But yeah, overall, I think the big theme right now is what is China's loss is India's gain.
How do you think about global markets and kind of investing overseas? Maybe let's take a new investor here in the U.S. Is it important to have international investments?
Those ADRs.
Yeah, for the last 10 years or since the financial crisis, international exposure has really hurt portfolio performance. So we've seen a lot of people leaning away from that and more toward U.S. Exposure. But what I would say is, broad-based vehicle like, a target date retirement fund, or even some of the, just basic like, Vanguard's international fund can give some exposure. Personally, I have 50% of my portfolio in the U.S. in U.S. stocks, and then I have the other 50 split between emerging markets and developed markets, excluding the U.S. So I personally think long-term, it's part of a diversified portfolio. And yeah, for the last 15 years, it certainly hasn't paid off. But if you believe that the world is going to continue to grow and develop, then you want to try to get some exposure.
Yeah. Talk to us a little bit about your background, your career trajectory. I want to hear about the beginning of your career, and then I want to talk about this baking on Long Island situation.
Oh yeah, that is hopefully eventually where
we're going back and then we'll go forward.
Exactly. So yeah, I didn't know what I wanted to do in high school. I wanted to be a pastry chef, but then I realized didn't have the creativity for it. So I was like, all right, I'll be an accountant. That's the next best thing. So I started my career at Ernst & Young in their kind of internal controls risk department. Super fun. Finished out my CPA there. Then I moved on, kind of grew a following organically online around, things I was seeing in the market and just kind of building a network there. That allowed me to move on to All-Star Charts, which is
at JC Peretz.
Yeah, a technical analysis research firm that I helped build up for about 3 years, and then I made the jump to the media side at StockTwits. So it's been an interesting journey, and yeah.
And now you're going to be a baker.
Exactly.
Yes.
Oh yeah, I forgot the baking part. So I would love to come full circle eventually and get back to that baking thing, but again, maybe it'll come in the way of me like backing a young good baker, and I just kind of enjoy the sweets.
Are there pastry stocks?
Pastry stocks. Well, with staples.
Mondelez.
Mondelez.
Which, by the way, have been great performers. Consumer staples at new all-time highs. So, I mean, yeah, people love their snacks.
We got a minute left. Any final words for investors here?
Sure. I would just say the market is as uncertain as ever. It's important to find your community online, really identify with others that are in a similar spot as you, trying to invest, trying to grow their wealth. StockTwits is a great place to do that, but there are other communities online. The most important part is just get involved. It's a learning process. You're not going to nail it immediately, so be patient and just keep trying because, being part of the market is a very important part of building wealth.
We got to say goodbye here, but before we go, want to make sure that you check out other episodes of Stocks in Translation on the Yahoo Finance site and mobile app. We're also on all your favorite podcast platforms, YouTube, Apple, Spotify, iHeart, Podtail, Pod Paradise, and more. That's all for now. Goodbye.